Can you hear me? Yes, you can hear me now. I can take it you can hear me now. Is that right? Yes, excellent. Thank you so much for confirming you can hear me. Excellent. So let's get started without further ado. So just before we get started, please, thank you very much, Manly, for letting me know as well that you can hear me. Much appreciated. Start off with a risk warning. Please do just take a few moments to read through this and then we will crack on. Okay, so as always, we're just going to start by going to the economic calendar, having a look here at the major data points which will or events which will be happening across the next week. And there are a lot of events going on next week globally, which is really interesting. So, you know, sometimes we have a week where the focus is particularly on the US or maybe in Europe or in Asia, but this week there is, you know, big stuff going on across the globe. We'll just start as far as the US is concerned, given that there is so much focus on when the Federal Reserve may start to cut interest rates and how that's sort of been a big driver of the markets in recent weeks, as well as obviously the AI trade, which has been helping US indices push higher. So we'll have a look at the US, then we're also going to be looking at China data, or the impact on the China 50, also the USD Japanese yen, which has been a big currency to watch this week, and what impact that could have on the Nikkei if there is any intervention over the coming week. Also, we've got elections in France over the weekend, and we've also got elections in the UK next week. So much going on. So yeah, next week, starting with the US, what have we got? So we'll just have a look. We've got Federal Reserve Chair Jerome Powell. He's speaking on Tuesday. Sorry, we'll start on the Monday. We've got the ISM manufacturing PMI. Then we've got Federal Reserve Powell speaking on Tuesday. On the Wednesday, we've got the ADP employment change, ISM services. We've also got the FOMC minutes, and then on Friday we've got the non-farm payrolls. So a big week as far as the US is concerned. Interesting to watch will be the non-farm payrolls after the payrolls last month came in much stronger than expected. Now we're expecting to see some weakening. We've also seen average earnings. They're going to be in focus. They're expected to ease. And also we're going to be having, I think the other one that's going to be massively in focus, probably not so much the Fed minutes, but more Federal Reserve Chair Jerome Powell's speech. Now we're obviously doing this webinar ahead of the US core PCE data later today. But inflation in the US is expected to continue cooling, but we are still seeing that it's well above the Federal Reserve's 2% target. There are other signs, I think, coming through that the US economy is starting to weaken slightly. Obviously, we had continuing claims yesterday, which were at the highest level since 2021. We also saw retail sales in the US starting to ease. And I think there is this sort of broadening expectation, maybe, especially if we're expecting to see unemployment in the US as well, which has been a little bit higher recently. There is this sense that maybe with the US, as we're starting to see this slight softening in the jobs market, delinquencies in the US are on the rise. We're seeing that, you know, households that had that money stashed away from COVID have actually burnt through it now. So we're at really this quite an important inflection point for the US economy. And that was pointed out this week by some Fed speakers as well, specifically Mary Daly, San Francisco Fed president, who was just raising some concerns over the health of the US labor market as we sort of head towards next week's non-farm payroll report. Now, if we do get a weaker than expected non-farm payroll report, and we've had inflation cooling today, which we don't know yet know, but those two things combined would suggest that the Federal Reserve could be on the right track, or that the data is on the right track for the Federal Reserve to consider cutting interest rates this year. Obviously, let's not forget this year we did have Federal Reserve Governor Michelle Bowman saying actually the Fed may not cut rates at all this year, and the Fed is in no rush to do so. So, you know, clearly there isn't one song sheet that they're singing from at the Fed. There are differing opinions, but obviously they are also very data dependent and trying to be very data dependent. So if we do get a cooling in the labor market, if we do get continued cooling in inflation, then that would suggest that the Fed could cut rates this year. The market at the moment is pricing in, I think it's about a 95%, 93% probability that the Fed will cut rates by 25 basis points in December. There had been some optimism that the Fed may cut rates in September, but after Michelle Bowman's comments, those expectations eased slightly. Now, here we're having a look at the US dollar. Obviously, if we have a look, it's picked up from that 104 level at the start of June and has really risen higher, hitting a 2-month high of just over 106 this week. Now, it has eased back from there, but I mean, this is the and it's just testing some support there around the 105.80 level, which is the May high. Now, if we're getting more signs, and for example, if we get weak inflation data today and then we get weak data next week, then that could put some pressure on the US dollar, pulling it lower amid rising expectations and rising confidence of a Fed rate cut. Levels to be watching out. If we get below that 105.80 level, then you know that's going to bring in 105 as the next level that I would be looking for on the downside ahead of the 200 SMA at 104.50. If we get, however, a sense that the US economy is still holding up firmly, and you know, just strong jobs data, strong ISM services, you know, and a sort of hawkish sounding Federal Reserve. Well, I won't say hawkish sounding, but you know, the Fed is appearing quite hawkish in comparison to other central banks. You know, you've got the ECB cutting rates, you've got the Bank of Canada cutting rates, you've got the Bank of England indicating that they could be cutting rates in the coming months. So, you know, in comparison, the Fed is actually looking a little bit more hawkish, which is what has been supporting the US dollar, as well as the fact that the US economy is just holding up better than other economies around the world. So if we get a sense of that continued sort of tone from the Federal Reserve, then be watching out for a rise above that 106.10 level. That's going to bring in this level here at 106.50. Now, whilst we're looking at the US dollar and talking about the Fed and rate cuts, always good to look at gold. Now, again, this is before the inflation data today. It's really interesting, gold. I think, you know, we're trading below this falling trend line here, but it has been range bound. If we have a look across this period from the beginning of May to now, it is relatively range bound. Buyers are going to need to look to get above this falling trend line here, which is around the 23.50 level, in order to bring 23.90 back into focus. That's the June high. Above here, look for 2400 before 24.50. Now, if we get a sense of weak data and that the Fed may start to be looking to cut interest rates sooner, then that's going to be beneficial for gold. It's non-yielding, it's USD dollar denominated, so if we see weakness in the US dollar, that's going to help lift the gold prices. However, if we get, on the other sense of it, stronger than expected US data that sees the market push back against Federal Reserve rate cuts, then you need to be watching for a fall in gold. And immediate support here would be at the 2300 level. If we get a break below 2300, watch out for 2280. That is the May low. Okay, finally, just going to take a look at the US tech, the NASDAQ. This is one that obviously has been very much in focus given the AI trade as well as the Fed trade. And, you know, we had that all-time high of over 20,000, has slipped back, found support as we would expect it to around, that was down there at the weekly low at the 19,500 level, and it's grinding higher again. It's brought it out of overbought territory. Could be going to tip back into it, but buyers are going to be looking to break above that 20,000. Any sense that the Fed is going to cut rates sooner is going to help this trade higher. Obviously, we've also got any AI optimism that could feed into this trade as well. On the downside, watch out for the 19,500. That's just the immediate weekly low to be watching on the downside. Below there, watch out for 80, well, just around the 19,000 level, just below 19,000. That was the late May high, or in fact the May high to be watching out for. So those are the concerns of the US, what the markets that we'll be watching. Next one to point out, I think we're going to move to, I think just whilst we're doing the US, let's have a look at that USD yen. We don't have any major Japanese data this week, but you know what? You just can't take your eyes off this trade because of those threats of intervention. We've had it rise to that 38-year high of over 161. Obviously, there are a lot of jitters going on. This trade is overbought, but it's not the first time it's been overbought. It was overbought back in May when we also got that suspected intervention. It's been interesting. Obviously, we had mixed data from Japan overnight. We had the Tokyo inflation, which was not potentially as strong as would needs to be in order to support views that the Bank of Japan will hike interest rates soon. But this is very much a trade that's showing that Bank of Japan Federal Reserve differential. So, you know, if we get a slight sense of the the Federal Reserve will start cutting rates sooner, then that could help USD Japanese yen fall back. Obviously, this is going to remain on intervention watch at these levels. As far as support, I mean, as far as the upside is concerned, it's blue skies. You know, I think 162 is going to be the next sort of logical level for this. But this is very much turned into a psychological trade rather than a technical trade, just because of those threats of intervention. Downside support 160. If we do get intervention, obviously, as you can see here, we get really quite some big, strong moves. Watch out for 157, 158 actually, it's the May high on the downside. And then below there, you've got the 50 SMA, which is what saved the sell-off in previous levels of intervention, and that's down at 156.80. So potentially a good place for a stop loss if you are sort of looking at doing this trade. But what does this mean for the Nikkei? So obviously we're very much been focused on the USD Japanese yen and what that's doing, but this is what's been happening in the Nikkei as well. So a weaker yen is obviously beneficial to the Japanese stock market. Weaker yen is supportive for the exporters' earnings, so in that sense it's a positive. Also, you know, just globally sentiment has been more upbeat this week, which has also helped the Nikkei. We've seen it's risen above this rising trend line, and then from here, you know, we're still looking to grind higher. There's, you know, supportive RSI, the momentum's on its side. 40,000 is the next logical target there. We do get some yen weakening, that could help it further towards the 41,135, which is the 2024 high. As far as support is concerned, I would say around here you've got that 100 SMA at 38,850. Obviously, you've got that rising trend line as well around just over the 38,000, and then below that the 37,615, which is the May low. So there's some levels to be watching on the Nikkei. So just going back now to the economic calendar, having a look at what else we've got going on. Chinese data. So we've got the manufacturing PMIs. We've also got the CACs in manufacturing PMI. So we're expecting to see growth again, but just a little bit slower, that growth. And also the non-manufacturing, we did see growth there, whilst manufacturing was in contraction according to official data. So again, I think what we're seeing from China is really that the recovery in the Chinese economy is proving to be bumpy. It's most certainly not a straight line of recovery. You know, for example, just recent data, industrial profits growth slowed sharply in May, yet we've seen sort of the consumer goods sector seeing moderate improvements. So that's what's been weighing on our minds. Again, sort of, you know, I think the market would like to see a firmer recovery in China. This is the China 50. As you can see, this has been trading downwards. So although we've been seeing sort of, you know, record highs on the NASDAQ, and we've seen a grind higher and the Nikkei, we're seeing some, you know, the Chinese stock markets here is trading in a falling channel. The RSI is pointing lower. You know, I think this is looking like a bearish trade right now. Watch out here. This is the support is going to be interesting. The 200 SMA, that's at about 11,950. Now, if we can get a break below there, then sellers could gain momentum towards this level here, which is the 11,800. That would be the next one to watch on the downside. Below there, be looking around the 11,500 level. If the 200 SMA does actually hold, and we are seeing a little bit of consolidation, maybe, well, not really, but you know, if that 200 SMA does hold on the upside, then watch out here for a support level, sorry, a resistance level, which was important level back in March, and it has had some level of resistance here in early June. That's around the 12,250 level, and above there you got the 50 SMA at 12, just under 12,500. So that will be an area to watch. What should we move to next? Let's go to Eurozone. Okay, so quite a lot going on in the Eurozone this week. Most importantly, potentially, is going to be the elections in France over the weekend. These are the first round of the elections. There are 2 rounds. The next round will be, I think it's the following weekend. Now, this is the CAC. This is the French CAC. We can see that this was you know, it's been falling since the election was called, fallen below the 200 SMA. Big concern here, I think, basically, not only is there the political uncertainty, but I think, you know, whether we're going to have an political upheaval, there'll be a change of government, because the far right, Marine Le Pen's National Rally Party is set to win. And I mean, right, what they are Eurosceptic now. They no longer saying and in sort of that they want to leave the euro and the eurozone like they did back in 2017. The party's matured since then, but they are still Eurosceptic in the sense that they will, or they've already said that they'll be looking to negotiate exceptions for France from certain EU rules. Now that, I mean, basically this just sounds like there's a bit of a headache that's coming towards the European Union, because France is their second largest economy. It's also the founding member It's also a founding member. And so, you know what, if we're having problems with France, then actually the EU may struggle just to move things forward, to get stuff done, to progress. Which we'll have a look at the euro US dollar in a second, but just these concerns are obviously for France as well. In France, the concern is that the new party will look to be increasing spending, fiscal spending, which could take France's debt levels to dangerous levels, which again is not good news as far as the euro is concerned, or the French stock market. So as far as levels to be watching as we come out of the elections on Monday, will be the 74, 76 level. This is the June low. It's the lowest level we've seen in the CAC since January. If we get a break below that level, then be watching out here for around the 7,300 level. That is the 2024 low. And if we get a rebound here, I mean, you know, we might find actually some of these concerns are overblown. Sometimes it is just the uncertainty that the market dislikes, and once it knows what it's dealing with, then it can recover. Upside resistance 76.24, that's the 200 SMA, and then you've got the 77.30. We need a rise above there in order to get a higher high. Just looking though here, I mean, you've got the 50 SMA crossing below the 100 SMA, you've got the RSI below 50. These are sort of, this is quite a negative looking chart. I mean, my expectation would be if we get a break below here, then we could see a sell-off. So just having a look then at the euro US dollar. Not only, it's quite a messy chart, this one, sorry. Not only have we got the elections at the weekend, we've also got, what have we got here? We've got inflation data from Germany. What else we've got? We've got the inflation data from the Eurozone, which is expected to cool again. So that could prompt ECB rate cut expectations. We've also got ECB President Lagarde to speak. Twice she speaks, and it's quite, and we've also got retail sales. What's really interesting with the euro, obviously we've had the ECB has cut interest rates. We had a 25 basis point cut at the beginning of June, but the ECB hasn't said when they will cut rates again. They've not committed to cutting rates again. But we have heard sort of several ECB speakers this week, and they've had sort of slightly contradicting expectations. Olli Rehn, for example, has said that he considers 2 more rate cuts this year as appropriate. Then we've had other policymakers who have said that 1 more rate cut this year would be appropriate. But either way, the market is pounding in 2 more rate cuts this year. We've also seen that the Eurozone recovery, which we saw across the first quarter of the year after a downturn last year, has started to stagnate and run into trouble. We've seen consumer sentiment stall. We've also seen data this week from Germany has been on deteriorating. So there are some concerns over the recovery in the region as well. Now, obviously, we've also got this political uncertainty that's really weighed on the euro. This was, I think, when we got the snap election called, it was when the price had reached that 109 level. It's fallen quite dramatically below the 200 SMA, falling back into that falling channel that it's been trading in since the start of the year. Levels to watch out for, okay, it's just testing at the moment, this 107 level. That's where it's been for a couple of days now, around that level. Look out on the downside for a move below the 106.70. That's sort of the weekly low to bring in 106. On the upside, quite a lot of hard work on the upside. It's going to need to, you know, get a close above the 107 to start with before getting this, the 107.85, 200 SMA into focus and the 108 level before targeting 109. But I mean, you know, to get a higher high, we still have quite a lot of work to be done there. So next thing we're going to talk about is the UK. There isn't much data from the UK, if any, but we do have elections here in the UK on the 4th of July. The Labour Party, who have been ahead in the polls since the beginning, have managed to maintain that lead and are expected to win quite substantially in the elections. The expectations of what the impact that a Labour government could have on the FTSE 100, to be fair, I think the idea, or even on UK assets, on the pound as well, broadly speaking, the election is not meant to have a massive impact, and that's basically because, to start with, the position that the UK is in economically, and also the pledges that have been made during campaigning, suggest that there actually isn't that much room for fiscal manoeuvre. So there is not actually that much that Labour can do without raising taxes, for example, which they've said they won't do. So, you know, we're not really expecting massive changes, but we do expect to have perhaps more stability and improved confidence to move away from that infighting which we've seen in the Tory party in recent years. So that might instill a little bit of confidence, a little bit of stability, which would be good news for sterling. And the FTSE 100, I would say not so much because it's so international. Probably the FTSE 250, the domestic index, would be more beneficial. But you know, some upbeat mood, a good sort of optimism on an upbeat Labour win could help the FTSE move higher. But the other thing to keep in mind, as I said, is we've got lots of China data, particularly the manufacturing, which impacts the heavyweight miners on the FTSE index. So, you know, again, if we get some upbeat data from China and we get a Labour win in the elections, and we get a sense that the Federal Reserve is looking to cut rates, which just helps global sentiment, then we could be looking for a move towards that 83.50 level. On the downside, we're watching here 81.50 is the key for a breakout. So if we just have a look again, it's been a little bit range bound over the past month. And GBP USD, let's have a look. Sorry, I can see we're running out of time. So here we go again. You know, there's this sort of we've had this downwards pressure because of the Bank of England. Looks like it's going to be cutting interest rates ahead of the Federal Reserve. We obviously had the Bank of England interest rate meeting last week, and there was sort of a sense that August could be the start of the rate cutting cycle for the central bank. But anyway, we've seen this weakness here. We've obviously also got the little bit of political uncertainty, but as I said, not really, not the same as in France. Levels to watch on the downside, 126. That's what we're going to be watching. If we get dollar strengthening, pound weakening, take out the 106, and you've got the 125.60, which is the 200 SMA. And above here, if we get, for example, sense that the US dollar is weakening, and we get a weak jobs data from the US, and we get you know, the Labour win, which boosts the mood, then we could find 127. That's on the upside, a level that we'll be watching for. Broadly speaking, I think this is quite it's a negative feel to it, this chart. If we do get a breakdown here, we're supported here by the RSI as well. So that is everything. Our time has run up. It always does so quickly. If you've got any questions, then obviously do just drop them in the questions box. Otherwise, I will look forward to seeing you again next week. Thank you. Thank you very much, Manli. Thanks for your comments. Cheers. Bye-bye.